Hello and welcome to another insightful edition of Investment Acorns, our exclusive series featuring thought leadership from fund managers at WhiteOak Capital Asset Management Limited. Joining me today is Manuj Jain. He's Head of Product and Strategies at WhiteOak Capital AMC. Welcome, Manuj.
Thank you so much.
Great to have you here.
Same here.
Now, Manuj has shared some interesting thoughts in the October issue of Mutual Fund Insight. You raised the ever popular question, is it better to start an SIP at the top or bottom of the market? So, it's a fact that many investors struggle with the market timing. What would be your advice to someone who's starting out now, because predicting the tops and bottoms of the market is quite an impossible task?
Right. So see, basically, this is an obvious question, and obviously everybody tries to invest at a time which they believe is the best time to invest. And obviously, the common belief is that if you are starting your investment journey, it is better you invest when it is at the bottom. So first of all, let's accept this fact that nobody can predict the exact bottom or the peak. You can maybe predict it once in a while, but you cannot predict it consistently. Right. But in that study itself, we did a analysis of last 27 years of data of Sensex, which is a popular equity market index, that even if you can predict it, okay, if you have some magical power and you can predict the exact top or the bottom, and you are about to start your SIP. So this study is basically telling you, if you are a genuine long-term SIP investor, it doesn't matter. Okay. In fact, the sooner you start, the better it is. Whether you are starting at the top or bottom, it has nothing to do with it. You have to start immediately, and you have to run that SIP for very long term. The definition of long term can be 10 year, 15 year, depending on your financial goals. So if you are a genuine long-term SIP investor, you should not be worried about timing the market, even if you can time the market.
All right, now your analysis also shows that it does not matter in the long term whether you're starting out at the bottom or at the peak of the market, because over time the return difference it's not much or probably negligible. So how important is staying invested for the long term?
So let me give you one example. In that study, we have taken all the market cycles where market has corrected at least 20% or more. So let's take an example, which is a very popular example, where market has corrected about 60%, which is 2008-2009. Right. So let's discuss a journey of an investor who would have invested at the peak of the market. And today, in the hindsight, we know that January 2008 was the peak of the market during that market cycle. And then it bottomed out in March 2009. So let's say you are an investor starting a 10,000 rupees SIP, monthly SIP during January 2008 at the peak of the cycle, versus another investor starting SIP at the bottom of that market cycle during March 2009. So till date, the investor who would have started SIP during January 2008 would have invested roughly around, I think, 20 lakh rupees till now. And the investor who would have started in March 2009, because that investor started 14 months later, he or she would have invested, let's say around 1,40,000, lesser than the first investor. The thing is, as we speak today, both the investors have made a reasonable return. The investor who started at the top would have made 14.4% XIR return approximately. And the investor who would have started at the bottom would have made 14.7% XIR till date. So first of all, see, the difference is only 0.3%. Right. But what is more interesting is that the investor who would have started at the top, because that investor started 14 months earlier than the second investor, would have made approximately 11 lakh rupees more. Okay. So by investing only 1,40,000 rupees more, by doing 14 higher number of installment as compared to second investor, he would have made 11 lakh rupees more. So on XIR term, you would say, okay, the guy who would have started at the bottom has made 0.3% higher XIR. But when it comes to wealth creation, the guy who started early has made the maximum wealth creation.
So in your view, how does delaying an SIP impact the long-term returns? What happens there?
So take this example only.
Right.
So this guy who started at the peak, okay, but started early, 14 months earlier than the second guy. So by investing only 1,40,000, that investor has made 11 lakh rupees more wealth as compared to the second guy. The question is why this is happening? Because of cost of delay. This is called cost of delay. Because you have delayed your investment by 14 months, the initial 14 installments are not getting the compounding benefit. And you know that the initial investments are the investment which will get the maximum compounding benefit. So by delaying your installment, you are basically losing out the potential compounding benefit on the initial transactions, which are the most precious transaction, most precious installment, which will make you the highest wealth. So yeah, starting early matters.
All right, so as early as possible. Okay, so what would you say to investors who are hesitant to start their SIPs because of market volatility?
See, SIP is such a wonderful tool. It is very simple. It is very transparent. It gives you all the flexibility. If you at some point of time want to stop SIP, it is that flexibility is there. If you want to make top up on your existing SIP, you can do this thing. If you want to stop it at some point of time, you can stop it. So first of all, SIP is a very wonderful tool, very simple tool, very transparent. So one should not be hesitant. We did this analysis that even if you are the most unluckiest person who end up starting an SIP at the very wrong time, perceived wrong time, but if you stay invested for long term, it doesn't matter. So first of all, you are not the unluckiest person, okay? Even if you are the unluckiest person, you will in the long term make it. I think the most important thing investors need to keep in mind while starting the SIP that they have to run it for long term, because over the long term, you will see a lot of micro cycles and everything will average out, and that is the whole concept of an SIP, that over the long term, you get the benefit of rupee cost averaging.
Well, thank you, Manuj. That's all we have for you in this episode. Keep watching this space for more information.